never, ever, ever, ever give up. And that's my mantra, right? So sometimes it's, if it were easy, everyone would do it, but it just depends. But I'm very focused on just continuing to hammer at it. I'm not a person that accepts no as that only answer. I want to keep working at different things and trying to work at it to get a result that is favorable for everybody, particularly for the direction that I wanted to take it in.
Welcome to the Real Estate Mindset Podcast, hosted by Eric Nelson and brought to you by Wild Oak Capital. Eric is a real estate investor, business owner, and performance coach. Throughout this series, Eric explores the mindset behind why certain investors are so successful and how we can learn from their achievements and failures. Eric asks the tough questions around the habits, discipline, mindset, and more required to achieve the most ambitious goals. Thank you for being here and enjoy the show.
Hey everybody, welcome to the Real Estate Mindset Podcast. This is your host, Eric Nelson, and tonight I have an awesome guest, Quentin D'Souza. Thanks so much for being on. I appreciate you taking the time.
Awesome. Thanks for having me, Eric. Appreciate it.
Yeah, no, thanks to you. So what we always do to start the show is, if you could give us a little bit about your background, where you're from, what you've done, and then what brought you to real estate.
Sure. I did a lot of different things earlier. I was into, I was developing websites. I started to do stock trading, stuff like that. And, I was a teacher for a long time, actually for about 20 years. And while I was teaching, I invested in real estate. Started in 2004. I really started to scale in 2008 and buying 3-4 properties a year. They were single families. I did buy, fix, refinance, rent. That was before it was branded anything. And I was doing that, did really well with it, kept building. I would do duplex conversions. So I would take a single family home, put a legal basement suite into it, or an accessory apartment on the back or above, depending on what it was, as long as it was legal with the city, so that I didn't get shut down and I could use both incomes for financing. Did triplexes, fourplexes, 8plexes, 9plexes. I've gone up to now, my last purchase was 202 units. Wow. It was a $40 million acquisition, and it doubled my portfolio this year with that acquisition. So I had doing really well, and then I just so it's been a great ride. I love real estate. I think everybody should have it as part of their wealth plan, not from a principal residence perspective, but from an investment perspective. So I think that's something that everybody should have, whether you're an active investor, a passive investor, whatever that looks like. You got to find something that's real and outside of the paper markets that usually people trade in. And so that I'm an advocate of that. I used to do coaching, which I did. It was very lucrative. So, I used to get paid. We had 12 group coaching clients at $750 a month that I would do twice a month. I would work with them. And then I had one-on-one clients that paid between $1,500 and $2,000 a month. And I had 4 or 5 of those. I got rid of all of that in January of this year. I just focused on my real estate portfolio, and then it doubled. So
amazing how your time can go to use. Oh, wow. Okay. So you have the acquisition now.
Yeah.
You got it under contract. It sounds like you've closed on that property.
Yeah. Closed that about 10 days ago.
Oh, wow. Okay. Super recent. Okay. Well, now that it's closed, can you give us some details, a little bit about, what you're up to, what's your business plan with that one?
Yeah. So, I've been doing this apartment building repositioning since 2015. So I already have proven the model. I've gone full cycle on a number of projects. So the way that we do it is we Our market is quite different than a lot of markets because it's very similar to like a San Francisco type of market or New York type of market where we have rent control. We've got lots of great appreciation. It's very hard to turn over tenants. I've written 2 books on property management and on the related to where I am in my province. So I'm very focused on doing it properly, but we turn over tenants, renovate units, be able to raise rents. We reduce our costs. We implement like RUBs if we have to. We use different services to increase our efficiencies in water, electricity, that sort of thing. My process is basically in 3 to 5 years, we refinance the property and then hold it. I've been very successful at doing that. The fastest I've done it, I just did, we bought an 11 unit last year for 1.3 million. I do everything off market. I've never bought even the 202 units. It's all by relationships with people or off market or, I nothing off the MLS. So we bought that one 11 unit. It was a pocket listing for 1.3 million last year. Just got it appraised at the beginning of July for 1.9 million. Again, that was from transitioning half the units, implementing some efficiencies, and then I paid back my investor their full investment amount plus about 20K, which was great. It is not usual for me to do that. That's like a home run. Maybe 1 in 10 buildings are like that. But I've been doing this for a long time. I've got a great relationship, lots of investors that I've worked with for a very long time. And, I have the ultimate problem of I have, not enough deals and more than enough money. So it's, it's a good thing, but it happens with time as you develop, relationships with people as well as, I have a really good reputation. So and I plan to keep it too.
Yeah. So, I mean, you said a handful of things in there that I really want to key on. So,
Sure.
First of all, you're in Toronto, correct? So,
Yep.
yeah. So just to be clear, I mean, I don't know much about the Canadian market, so it's really interesting to chat with you and hear you kind of compare it to San Francisco. And when you say that, I think that there's probably some people will shy away, right? But maybe there's an opportunity there if you're willing and the people, the city, and you kind of know the process. Maybe you have an in there. And then the other thing you mentioned was relationships, and you heard, I think I heard it twice. Is in my opinion, this is all about relationships, this business, and that's partly honestly why I like it. It's like to know people, to build your reputation, to be a person of integrity, like you've done over time. It sounds like you're purchasing with investors. To do that over time and to continue to have them reinvest with you, that's key. So love to hear that from you, from someone who's further down the path, right? So very, very cool. So
oh, thanks. And you know what? I do have, I have invested in the US as well. So I've got properties, just some single families and duplex, I think 5 properties in Florida. And I've invested in some syndications, ATM, just a bunch of different things in the US. But I use that for more hedging than anything against the Canadian economy. It's great for our vacation fund because everything's in US dollars, right? And so it makes it a lot easier for us to travel, and we like to go to Florida. So it works out. Gives us a good excuse and a nice write-off too.
Yeah, no, I like it. Well, what else is cool is a lot of people will think like, I can't, I have a certain profession, whatever it might be. You mentioned you were a teacher.
Yeah.
Lots of people will say, well, I can't invest in real estate because I don't make enough money or whatever it is. So I'd love to hear a story of someone like yourself who made it happen. And can you describe those early years? How did you first get going? Just give some tips to people starting out.
Well, you know what, if you can believe it, really, we invested about $5,000 in our entire portfolio. My portfolio now is about $80 million in assets under management, right? I raise money mostly for my deals, but we started off with 5,000. But using that BRRRR method, we were able to create equity. And at the beginning, it really felt like I had 3 jobs because I had Teaching, and I actually have a master's in education, and I have my principal qualification. So I had all that before, and then I got into, into the thick of things, and then I got hooked on real estate, and I was doing that, and I had a young family. So my kids were really quite young at the time. I would say there were probably maybe like 2 or 3 and 7. And so, I felt like that was my third job, right? Like, and it was hard to balance everything. And I'm a very active person, so I like to do different things. And real estate really got me, and I just saw the benefits of owning one. And then, I bought another. I was able to refinance it, pay down the first, did the same thing on the third, the fourth, and people were looking at what I was doing, and they were interested in coming along for the ride. And so I started off with just straight partnerships. So like a 50-50 partnership. I do all the work, you put down the money and do the qualification bit for me, and we split everything 50-50. And it worked out really well. My partners have all done really well. And back in 2008, you can imagine to now, I have a 13-year track record with partners, and that goes a long way. Every partner that I've ever invested with me again, right? Because they've seen the track record, and they know, they've seen full cycle what I've done. And I mean, I have great results that no one would believe if I told you anyways, right? Because it's true, it's real estate, right? And our market has really appreciated really well, right? On top of, I was always buying for cash flow, and I had my mortgage pay down, and I was also doing value add appreciation, all the things that make real estate great. I was taking advantage of. And of course there's some depreciation, but not as, like, I love the US for your depreciation. It's like it's like amazing what I from down there. I never have to get double taxed because I always am able to write off everything in the US, right? So as a foreign national investing in the US, that's a complication thing, something that you have to be aware of. You have to structure yourself properly, otherwise you get taxed on the same dollar twice.
Oh, wow.
And
Well, that's good
from
info.
two countries. That sucks.
Yeah, that really
So,
sucks.
yeah, so structuring it properly is really important, and that way you're only taxed once. And if you can get it all taxed here away, which what happens with the depreciation and all the lovely stuff that you have in the US, I don't have to get double taxed on the other side, which has worked out really well for me, and it allowed me to reinvest in the US as well. So it's been quite an interesting experience for sure. Sorry, I went off on a tangent.
No, it's good. I mean, I think it's all good information to have. I mean, if you're a Canadian listener to the show, excellent information. I mean, yeah, in the US we have incredible tools. I mean, between depreciation and the 1031, there's the possibility to really never truly pay taxes, assuming that basically you hold until you die. I mean, that's kind of morbid, but that's how it works. So it's kind of good information to talk about. So no, any tangents, all good. So no worries. And then I love what you said is like, yeah, the Burr method's kind of, I think Brandon Turner kind of branded that, but I mean, the concept
it's been around for decades.
Like, I know and he'll admit that, it's like, he didn't invent it. He just invented that word. But I love the strategy. It's, it depends on how you use it: buy, rehab, rent, refinance, repeat.
Yeah.
And it works really well. And so I will say, I did have personally an issue with partnerships as well for a while. Mm-hmm. And it took a mentor of mine to say, kind of knock me over the head and say, hey, you can go much further, faster with partners. So I closed on an 8-plex earlier this year with a partner. Is a similar story. It's almost 50-50. There's 2 of us who are doing kind of all the work, and the gentleman who put in the funds, he's a friend of mine, and it's super successful. And we couldn't have done it without him, and he likely couldn't have done it without us. So it worked out really well. So I encourage listeners to hear what you said about that, as well as the partnership thing, 1, and then 2, you really don't have to have a bottomless amount of money to get started.
No, not at all. I had a very similar experience with my first joint venture, unfortunately. If I would have let that stop me, but I'm not that type of person, I would have gotten nowhere close to where I am now. Like the first person that I partnered with really we weren't in line mindset wise in the direction we were going. So his mindset was a short term, make money now kind of flip mindset. And mine is a long term, let's hold, let's wait, and let's get the real value out of this asset and refinance it as many times as we can and continue to hold it, right? And what ended up happening with him is that I had to pay him out $25,000 very short term. Like, we had done all the work, got ready to go, and we had already got that 50K. And back then 50K on that building would have been a full refi, right? And so I had to come up with the other 25K, buy him out. But what was great is I used the funds from another project to be able to do it, right? But the thing is, the real kind of story behind that is that he had a different mindset than me. And now every time I work with a partner, I have a questionnaire and I ask them, questions about their goals, where the money is coming from, what they're like, what are they looking for? When are they expecting the money back? Do they need the funds to live? I don't want to have anybody invest funds with me that are, need their funds to, like they're expecting to the dollar what's coming out of the real estate asset. Because that's not the type of investment that you're doing when you're investing in as an equity partner in a project. And aligning that with the vision of the partner, with your vision, is really important. And when you do that, that's when that magic happens, right? You have somebody who brings the money, somebody who finds the deal, somebody who manages the asset, right? And then all of those together really can make the deal come together. And when you really work at that and you find multiple people that you can work with that do that, all of a sudden you can scale and you can do really well with your real estate investing portfolio. And I own a majority of the asset. Like, if you look at my portfolio, about 25% of it I own 25%. The other 75% I own between 50 and 100% of the asset. So it's not that, like, it really can do well for yourself. When I did the coaching, I really was, adamant about teaching people about like the ins and outs, but I was very specific about mindset and planning out what you wanted to do. Like, the mindset is really important, but also the planning part of it. And I made a planner for them, and that's the same one that I had used. So I do a lot of, like, I do 10-year goals, and then I do 3-year goals, and then I do quarterly goals. I do not do 1-year planning. I find that what happens is, if I do 3-year goals and I do quarterly planning, I find that I achieve my 3-year goals in a lot faster time than I would have if I had made it a 1-year goal. It's just because I'm only focusing on 90 days. And I also, I always focus on finding funding, financing properties every quarter. I have 3 actually my quarterly plan is right at the side of my desk here. And I have my weekly plan right beside me. I've been using it for, I don't know, like a decade. Like, it's like almost from the very beginning, probably about 2 years into it. I was part of Strategic Coach and Pro Coach, which are like different, like Dan Sullivan is a Strategic Coach. He's a part of that program. He was really excellent at a lot of the tools, and I adapted them for real estate for myself. And over time, I became part of the Entrepreneur Organization as well, which is, I think it's a global nonprofit, but it's great for networking with other real investors, but entrepreneurs and business owners. And so it helped me to tweak what I was doing as well. So I put it together in a package, and that's what I would use to coach my client, like the people that I work with, as well as sharing the knowledge that I had built up, through growing a portfolio of properties. And then I stopped in January, and then I put it together in a book, and I put it together in the Action Taker Real Estate Investor Planner, and made it available on Amazon for everybody.
I like it. Yeah. Now we don't have to pay the weekly or monthly fee. We can just buy the book.
Yeah.
Well,
And it's helpful. I still use it, like I said.
Yeah. So that's actiontakerrealestateplanner.com, right?
Yeah.
So how has it been without coaching clients? I mean, have you missed it? I mean, has it been a little freeing? I mean, what's your transition been like?
Yeah. So I'll tell you what happens. Like, I had a job as a teacher. I loved it, and I still enjoy teaching. I'm and I enjoy learning. I'm a constant learner. But when I left teaching in 2014, I picked up another job. You know what the job was? It was flipping houses. I flipped a dozen houses in a year, and I did well with them. I did six-figure flips, but again, I was working. I was working like ridiculous because I had just quit. I had like 2 weeks off, and then I just started into a flip like right away. Like, I couldn't sit around. What I found was that when I started to do coaching and I enjoyed it, in 2020, I was kind of like, I feel like I have a job again. Like, I'm going from coaching one student to coaching another student. This isn't really what I have planned for myself to do this, right? I would rather not be doing that. And one of the things that I do actually, and it's part of the planner, I write down all the sources of income that I have, right? So I list all the sources of income that I have, and everybody should really do this. Like, if you list like your job income, your salary income, you put that on a line, and you put your cash flow on the line, business profits on the line. The thing is that most people, if you crossed off an income source like your salary, you would be in trouble, right? So what's nice is I had been building different types of income sources. The cash flow from my portfolio far exceeds my coaching income, right? So what could I do? I could cross off my coaching income. I still have my cash flow, and I can do something else. Well, all I did was I focused more on my real estate portfolio, which um, really, because I'm focusing on apartment buildings, I'm focusing on net worth more than cash flow right now. And because I don't need the cash flow, it's not something that I'm focused. So all I do is I focus on more acquisitions on bigger buildings and developing relationships with partners. And they're people that I like hanging around with. If you're going to be a pain in the butt, I don't want to be your partner, right? Like, I have the choice.
Yeah,
I don't need to.
that's a good tool. Is it on your questionnaire? Are you a
Yeah,
pain in the butt? Be
yeah,
honest.
yeah. Well, I mean, if you can go out, there's a friend of mine, Arlen Dolan, who says that, can you have a beer with them? Is it somebody that you could have a beer with?
Yeah, my dad has
Um,
that same rule. Very
yeah,
similar styles. Like, if I could have a beer with that guy, I consider partnering with him. Yeah.
yeah, absolutely. Because, like, I'm a pretty low key guy. Like, I like to, tell it as it is. If you're gonna come at me, like, I'm gonna defend myself type thing, and like, I'm really nice and I really trusting until you're until you show me any different, right? And then then everything else is off.
I hear you. Well, cool. I mean, thanks for pitching for the book, and I have a million questions for you. I mean, it's so awesome to hear all this stuff. But I think what we'll do is we'll transition to the mindset piece because I've heard you talk about it a handful of times.
Yeah.
So I have several questions for you, and then again, I mean, there's no right answer, and feel free to tell your reasoning behind it or whatever. So my first question is, do you have a morning routine?
Yes. I do. I wake up early, usually before everybody in the house. So I'm usually waking up about 6:30 every morning. I go for a walk for an hour. I read. I sit by myself and think. I will also, just relax. I'm not really focused on doing any work. Um, in the past, I've used that time instead of walking to write books. I've written 4 books, so it's that same time I would use, but I would do it for writing. Now I use it for walking. I will at about 9 o'clock. I'll get on the horn with my assistant. I'll talk about the priorities for the day. We'll do a huddle, and I'll let her go. Then I'll start to talk to different partners, different people that I have that I have some relationships with that I need to work on, and I'll go through my day that way. So morning wise, it kind of starts off with exercise and then kind of getting going, and then get right into my day.
Yeah, I love that answer. I mean, it's something similar to what I do. I find if I wake up before everyone in my house, and every day is a little different, to be totally honest, but I had trying to have a routine. But what I'm going for is that the time before the quote unquote chaos is super valuable. So it's interesting to hear you say that. I mean, everyone has, again, a different answer, but in my opinion, that kind of calm before the storm sort of sets you in your place, sets you in the right mindset to move forward. So very
Yeah,
cool.
and I like to take a walk in the afternoon. Like I'll go for an hour or an hour and a half, sometimes 2 hour walks in the afternoon. I just like, there's some hiking trails by my house. I like to hang out and do some hiking there. And I'll listen to audiobooks or podcasts and just go off or I'll meet up with people and just chat with them, and they'll usually walk with me. I'll say, I'm going for a walk. You want to come? And we'll talk real estate as we walk, or I'll be on the phone talking to people too. So
I love it. Cool.
yeah.
So the next question would be, what books are you currently reading, or what books can you recommend, aside from yours, but you can recommend yours.
No, that's kind of cheesy. Okay, how about like, I do have a couple books that I've been reading recently that I like, and one that I always kind of reread. So one is Die with Zero. I don't know if you've heard about that book before, but
Mm.
it's a great book. It's getting all you can from your money and your life, and it's by Bill Perkins. And it's not the type of book that you think it is. When you hear the title, I don't know why, but the title kind of throws me off. But when you read it, like, it really is something about experiences, and it made me think differently about intergenerational wealth and what that's going to look like for me and my family, and what I want to pass on to my kids and how I want to pass it on. So that's a good book for that. And the other one that I recommend, and I give my, like, the one of the first books I get my kids to read is the Top 10 Distinctions Between Millionaires and the Middle Class by Keith Cameron Smith. I don't know if you've heard of that book,
No, these are
but
awesome.
yeah, it's just a little small book. Like, it's a quick read. It's good for like teenagers too, but like adults could read it. Like, I mean, I read it as an adult, so, but it's a great kind of mindset piece book. And it's a good kind of how do you distinguish and why is it different? And then I found that that one was foundational, just as foundational as like the Rich Dad Poor Dad book, right? That's how foundational I believe that book is to helping people. And it's just a quick, simple read. I want to buy like 100 of those books and hand it out to people like candy. That's one of those. I might
No,
do
I
that
love the
one
idea.
day.
I love the idea of gifting books. No, I mean, those are both awesome recommendations. So, I mean, if you're saying it's foundational is Rich Dad, Poor Dad, because that's the one everyone talks about, and for me, it did change my perspective as well. So, absolutely looking forward to reading it.
Oh, cool.
Cool. The next one would be, do you currently have a coach, or have you had a coach or mentor? And it's interesting that you were a coach, so I'm interested to hear your answer here. And if you had to invest some money, was it worth it?
Well, I've spent I spent hundreds of thousands of dollars on coaches. Like, strategic coach, I believe it's something in the order of 20K uh, per year that I spent. I also, the entrepreneur organization, I still spend close to 8 or 9K a year to be part of the organization. And really, that's they call them forum groups, but they're really entrepreneurs who are in different industries, who earn at least $1 million US annually, and they meet together. So they act like peer mentors almost. Coach wise, I have had coaches before. Pro Coach was another one. I believe that, like, it's a great tool for you to help you to level you up. But one thing that I also do that may be a little different is I have an accountability partner. And accountability partners don't cost anything. And while I think like it's a great way for you to establish, I'm working on these 3 things this week. What are you working on this week? They don't have to be even in the same industry as you. And all you're doing is you're telling them, this is what I'm working on, and they're just keeping you accountable for doing it. And if you keep bringing up something that you haven't done every week, you're going to annoy yourself. So you're going to do it anyway, right? But
Nice.
yeah, so there's lots of different ways of doing it. I think having a coach is really important, but you can also find groups of people that are ahead of you, and they act like peer mentors, which are really good. But it takes you some time to get to that. So, like as part of the entrepreneur organization, there's a bunch of real estate investors across Canada, and we meet. Like we'll travel to across Canada to meet, and those guys are ahead of me. They make me look small. Like, and I don't think I'm like, usually I'm not this have the smallest portfolio in the room, but they make me look small, and that's the type of room that I want to be in, right? But it takes time to get there, and now that I'm in that room, all of a sudden I'm buying $40 million assets because they're buying $40 million assets or $100 million assets. And, my 40 million looks kind of like, oh, well, you're getting there, Quentin, keep up the good work, like.
No, I mean, there was so much good stuff you said in there. So, I agree. I really wholeheartedly believe in coaching, and that's why I asked that question. But I also believe what you said too is it doesn't have to cost a ton of money, especially early on. Accountability partner could be such a good tool, or maybe you get together with coffee, twice a month or something with some friends. And yeah, it was really powerful to say it out loud, to say, here's what I'm working on in the next 90 days, or here's what I'm working on this week or this month. And then when you meet, you say clearly, all right, where are you? Well, you said you're going to do it, and it's a pretty motivating tool. So I love that tip. Yeah. And then
My accountability partner is in Panama now. He used to be up where I live in Ontario, and he's sold his portfolio. He's into crypto. He's in Panama, but he's still my accountability partner. 11 a.m. on Mondays. We still, do the same sort of thing, and it's different, right? But it's easy to do. He's not even in the same industry, but we're still accountability partners, right? So it's a great tool that anybody can take advantage of.
Yeah. And then the other thing I wanted to focus on before I forget was, we talk about this a lot in the show is, be in a room with people who are doing things you want to do, or join a group or whatever. And there's a lot of Facebook groups and stuff where people are doing things that you aspire to do. And in my opinion, it basically makes it less daunting. You can ask the questions, you can look someone square in the eye and say, how did you do it? And you'll realize they're just a person too, and you can do it as well. So if it's something you want to do, but to put yourself in the room with those folks is again, a very powerful tip. So I love that.
One thing I want to add to that is get away from just behind the computer. Like I found that the relationships that I build happen because I've moved, and granted, the last year and a half has been, an exception to the rule because we've been, forced to do this. But if you can get in the actual physical room with them, it's a lot different. You create different types of relationships. People remember you differently. They smell you, they see you, they can shake your hand. They can't get away from you if you're talking to them and you're having a beer, right? Like, there's a different approach to it, and you will be more memorable to somebody that way. Then you can still be memorable on Facebook and like in a Zoom call, but it'll be more memorable if I come and see you, right? And we go out for a beer and we chat, and then I work with you on something and you work with me on something, and we laugh, and something goes by and we can share a shared experience, right? Like it's all of those things that create that just little bit of difference that could mean that I call you, I go, hey Eric, I'm working on this, what do you think? Right now we have a different type of relationship. I can call somebody on the East Coast that I know is far ahead of me and say, hey, listen, this is what I have, can you help me to figure this out? I know he's going to answer because I spent that time with him numerous times before in person, and he knows he's going to see me again.
No, I mean, that's again an awesome tip. I feel the same way. I mean, there's nothing in the world that I enjoy more than just hanging out with people. If I could hang out with people for a living, I think I'd be extremely wealthy. My wife gets a little tired of it, actually. She's kind of an introvert, but no, that's a really powerful tip, is to spend the time to really get to know someone, spend the time in person with those people. And I love meetups. I host a meetup here. Again, it's for that reason. One is to meet new people. Two, I love talking real estate. But three is just to be around people doing something similar, and you'll always find new tools, new ideas, new whatever it might be. So I love that tip.
You know what? I started a meetup in 2008. We had 4 people. Before the COVID, we had 120 to 150 people every month coming together.
Oh,
right?
awesome. Yeah.
Like, it's called the Durham REI, and, it was just people in the area, and it just kept growing and growing. And now people travel 4 or 5 hours to come to that meeting.
Oh, cool.
Yeah. Like, who knew? Right. But it's the power of just having the right people in the right room and inspiring people. And, that's what I like. I'm not really a hard sales type of guy. I would rather see that you're very interested in it and then invite you to participate rather than try to sell you on anything. And what I find is that when you're in person with people, they can see your honesty. I don't know if that can,
authenticity as well, probably.
Yeah, it just comes through better, right? And that's what I found had happened. And I'm sure your meetup group is the same. It's just going to keep growing and growing as people come together, see you, feel that you're honest and you're telling it as it is, and they're going to want to continue to come out, and they want to be with you. So they want to invest with you. They want to do things with you because they feel that you're the real deal, right? And that's all they're looking for, right? Is somebody who's going to do what they say they're going to do, right?
Yeah, that last bit's so important because integrity is everything. It really is being honest and saying what you're going to say and what you're going to do. Is if it's not a good deal, I've walked before and lost money, and that stinks, but it's better to do that than be in it and try and force it or something. And I use that as one very small example, just the ability to say, this isn't good, and look someone in the eye and say, wow, I'm glad we dodged that bullet. Or in worst case scenario, just say, hey, doing my best here. We're, a lot of owners lost some in COVID last year. That type of situation, just honesty is ultimately the key. So I'm glad you said that, and just say people are looking for someone who said that, do what they said they're going to do, or at least die trying, right?
Yeah, I've got this on my desk here. It's like a thing that I made. It's like never, ever give up. And that's my mantra, right? So sometimes it's, if it were easy, everyone would do it, but it just depends. But I'm very focused on just continuing to hammer at it. I'm not a person that accepts no as that only answer. I want to keep working at different things and trying to work at it to get a result that is favorable for everybody, particularly for the direction that I wanted to take it in. But I'm really, I work hard to be able to do that. And, when we're raising funds for projects, one of the things that I find is that, there's a lot of different risks at play. I put my hard money risks when on a project like the 202 units, I have, $750K on the line, right? Hard money. If I don't close, it's not my investors that are going to lose that money. It's me, it's my hard money. Now I can raise the funds to take that up as part of the process, but that's a huge risk, right? But I would never want to risk other people's money that way. So I make sure that I close on it, and then when everybody's in there, then we're good to go. So I mean, there's some definitely challenges to this business, but doing what you say you're going to do, and treating other people's money better than your money, right? Which is that would be that example. And it can make a real, big difference in the quality of the relationships that you can create, and the quality of in people who want to work with you as investors.
No, I have the exact same philosophy. So can't talk too much about it because we're under contract at the moment, but it's a similar deal where we have a lot of money in, and if it goes sour, it's us that loses, right? And that's the way it should be. It shouldn't be investors' money in the line until the deal's closed. So I love that philosophy, and it just shows that you're in it. And it also shows that you believe in the deal. You're not just selling something. You wouldn't but 750K, that's a huge amount of money at risk. So kudos. I love that style.
Yeah.
Right on, Quentin. Well, thanks again for that one. The next question is, what's something that you've done in the past that you would not repeat that we can learn from?
That I would not repeat. I don't know. Like, you know what? I think I probably would have quit my job sooner than I did. I think I was really being conservative. I had built up when I quit in 2014, I probably could have quit in 2012, or maybe 2013, but I waited to 2014, and I definitely wouldn't do that again. I would have quit sooner. I had the cash flow, all the numbers worked. I waited for like a year and a half to make sure that I practiced having money come from the cash flow so that I could,
I like that.
make
I like
sure
that. Actually, I like that tip, but yeah, maybe a little conservative, but
that's what, like, all I did, I had money coming in, but I was just taking the money from the cash flow from the property and practiced for like a year and a half. And, going back, I probably, I wouldn't do that again. I would have just done it. But I think that also comes from the experiences that I've had, and where I'm at now. It probably is more of a mindset shift than anything, and it comes with a lot of training and coaching, and all of those good things helps me to make changes and decisions more quickly, bigger decisions more quickly than I would have in the past. I definitely would have done that sooner. I wouldn't have made that same decision.
I like it. Well, thanks for being honest. Next one, we talked about a lot of these, but I just like to ask the question: what's a mindset tip that you can share with our listeners that can help them propel forward?
Yeah, take action. It's about taking action. Like, my book is this planner it's a half a book, half a planner. It's about taking action. If you can do anything, make sure that you get started. There's too many people who are just always going to seminars, reading books, listening to podcasts. You got to get out there and you got to do it. Find somebody who's already doing it. Find them, even if they're a year ahead of you or a year and a half ahead of you, follow what they're doing, figure it out, and take action. Do it, right? Don't wait. I find that people are waiting for some sort of sign. They're waiting for the market to be different. They're waiting for, don't time the market. It's about timing the market, right? So get in there and get started. Take action. Don't be the overanalyzing everything. Trust your gut. Do the research, do the work, but get started. Get going, because the faster you get started, the faster you get results. And in this business, and the faster you fail, right? But you always fail forward if you continue to have the right mindset, and the people around you, like yourself, as a coach, to help them to move forward, right? If you can find that with the people around you that are helping you, then you'll only fail forward, and that's what you really want to do. Fail faster, fail forward, and then you'll be surprised at what you achieve. So
that's so good. Yeah, I mean, completely agree. I have a handful of friends that love the idea of something, and read, and are always sending me quotes and stuff. I'm like, oh, it's really good stuff, man. And in the back of my mind, I'm thinking what you just said is you got to take action. You have the skills, you have the ability. Can't say it better than you just did. So love it.
Yeah, I still have friends from, growing up that wanted to invest in real estate, right? I'm not out to convince anybody. I can tell you that the results are there. I have the results to prove it, but whether they do it or not is still always going to be up to the person, right? And something maybe at the back of their head, and that's where, having that coaching piece comes into play, right?
Yeah, so good. Awesome. Cool. Well, these are the hardest ones for me. I'll just ask you, what is your definition of success?
That's interesting. I think success for me now, success is impact that I make on the people around me. For me, success is my kids being able to do what I have been able to do and maybe take it in a new and different direction. Success is seeing other people succeed around me as well. my partners, people that I interact with. I really enjoy that. Success is it's about being happy and being present, and being able to help other people in a way that I think works for me.
There you go.
Yeah.
No, I love that response. I'm not even going to reply, because if you're listening to this, go back, because there's so much good stuff that you just said. And then part two of that question is, if someone asks you, why are you successful and not other people? What's your response?
Huh. Well, I go back to that statement that I said before. I'm a person that takes action. I'm not really a talker. Like, I like to take action more than anything. I mean, we're having this conversation, but 99% of the time I'm out getting things done. I'm making sure that we're moving forward on projects. We're doing a build project. I just got the plans or the survey done, and we're going to go to the planner with that, and we're going to look at building another 17 units beside a 23 unit building, right? Like, I'm always out doing, and I'm making sure that I have other people that are behind me that are doing more. They're doing more behind me, and so it feels like I don't know how to describe it. It's like I'm being propelled forward by the people who are behind me, who are actually working hard too. So the property manager, my assistant, like all the different people that are behind me are really helping to propel me forward in order for me to continue to scale where I'm at. And the partners, all of those people help to push me forward, and that really helps quite a bit.
Oh yeah, it's so good. Well, Quentin, this has been an amazing show. Really, really appreciate your time. Thanks for being here. The last thing, of course, is how can people connect with you? Where can they find more and really learn more about you and connect?
Yeah, so I'm on Instagram, so you can check out QManREI on Instagram or Twitter, or you can email me at Quentin, QUENTIN at getrealwealthy.com. Or you can grab my books on Amazon, the Action Taker Real Estate Investor Planner. And you can grab I forgot the URL for the free chapter, but whatever. I'm sure people will look.
You can Google it. Yeah.
Yeah. In any case, I'm just thanks for having me, Eric. I really appreciate it. And I wanted to say something. I thought at the very beginning that mindset was all like a woo-woo thing. Like, every time I went to like a seminar or something, I was always, this woo-woo stuff, this mindset. Let's tell me strategy. But mindset is the thing. It's like the thing that holds everything together, right? And if you don't change your mindset, you're not going to change your life. So kudos to you for focusing on the mindset piece, on this podcast, because I think once you can change your mindset, you'll change a lot of lives. So good stuff.
That's awesome, Quentin. Thanks for saying so. I mean, that's such a good nugget. So again, this is awesome. It's at the very end of the show. It's such a good way to end. So thanks for saying that, Quentin. Thanks again for being here.
Oh, you're welcome.
Hey, listeners, again, this is Eric. A little post show again for you. Thank you so much for listening. If you're listening on iTunes, Spotify, wherever, please leave me a review. Please tell your friends. I really do believe in this stuff, and I want to reach as many people as I possibly can. One other note is I'll be speaking at a conference, Multifamily Masters. It's really a mastermind, but it's multifamilycon.com, and it's November 13th and 14th in Orlando. So hopefully some of you can be there. And then as it gets closer, I'll have a little code to get a discount on those tickets. So listen in for more. Thank you again for being here. Thanks for listening.
Thank you for listening to this episode of the Real Estate Mindset Podcast. If you've enjoyed the content today, please follow this show wherever you listen to podcasts. And don't forget to head over to wildoakcapital.com for more information or to connect with Eric directly. Please take a moment to leave a review or tell a friend about what you've listened to today. We hope you'll tune in again soon.